The basic idea in the ETF is two things. One, and crucially, is like tax. This market has this hot ball of money that's sloshing around. It bids up a theme, and then the money moves away, and that theme it retraces, gets bid down. And classic examples like Dell. Early January, owned Dell. It ran up 80%. I'll pull up Dell here. And we said, gee, this thing went from cheap and underappreciated to expensive. But this is the nature of the markets we have today. I think it's a consequence of a couple of factors. One is the degen economy. The second is social media. The third, though, is this quantitative easing. There's all this money is just sloshing around out there. But imagine if you have an ETF, the key thing is this: the IRS does not tax in-kind transactions. So in an ETF, you got an authorized participant. They can create a basket. You can swap a basket in kind, and you're not going to pay a tax on that. And that's also really interesting for high net worth investors and family offices that have significant appreciated stock or digital asset exposure. Let's say you bought NVIDIA and you've got a massive position now because the positions outperform. You don't want to sell it. You don't want to pay taxes. You can do an in-kind transaction with the ETF. And so you can get instant diversification, not pay taxes. And I think that's very powerful. Tax is one of the few levers in your control. Markets are risky, investing is risky. The world is uncertain. It's full of uncertainties and probabilities, but taxes is one of the levers that you can control if you're deliberate about that. So it's something we're contemplating about launching. We're actually talking to some of the best VCs in the world to get behind this idea as well. I think that'd be actually our last round of financing as well. If any thoughtful VCs around this or smart around markets, let us know. I think it's just a super interesting idea. And I don't know anyone that has the kind of investment approach where we do, where we got the top-down macro, we're combining that fundamental bottoms up within certain themes we like with the right factors. And then when things get expensive, we rotate. We want to rotate out of that. When things get cheap, like dislocated, we want to rotate into that if we believe that the right trends and themes are in place. That's a basic strategy. And I think the next 10 years, you're going to see more of that dynamic play out. This is very different in the market than the 2010s. You're having accelerations and compressions of these time cycles. Dell should have been a 2-year investment. It did a 2-year move in 4 months, and that's not the only one. Well, what do? If you don't sell, you're going to wear a drawdown. Or NVIDIA is a good example. We have a low basis in that. We don't want to sell. We're going to pay taxes, but you're going to have to sit through the Cathie Wood drawdown. So that's why we're really excited about the ETF.